How has the pandemic changed the insurance industry? It's had a everlasting crushing effect on the insurance industry. First and foremost, we are seeing all-time rates, just increases that are just through the roof. Why is some of this happening? Well, on a personal auto policy, how I like to share this and give you a quick example is, how many times have our clients during the pandemic in auto accidents or damage to their vehicle? Their vehicles are now being repaired. As they're sitting in the auto body shop, they're now no longer sitting in there for 5 or 6 or 7 days, which was the norm prior to the pandemic. They're now sitting in these garages for 20, 30, 40. In some cases, we had a specific client, a good friend of mine, for 6 months wait to get parts. Car parts were backlogged. That backlog caused the insurance companies a lot of money. How is that? Number one, when your car is inside the shop and you have rental reimbursement, that carrier was paying rental reimbursement significantly longer periods of time, which was costing carriers millions of dollars. So that was one thing that caused insurance companies a lot of headaches and aggravations. A second thing that was very costly is rental reimbursement. The average was about 5 days for an accident, for a car to be repaired. In some cases, we were seeing 7 days, and in some cases, you might even see 10 days. But during the pandemic, rental reimbursement was minimally 25, 30 days on every single claim. Why is that? Because the car parts were backlogged. So rentals were being out there for much longer periods than what was expected prior to the COVID pandemic. So that cost the insurance companies also an awful lot of money. The other thing that played a big role is what happened during the pandemic was used cars hit all-time high rates. People were selling their used cars. Car rental companies were selling used cars because it was more profitable than renting the vehicle. So they were selling these used cars. That caused a shortage in rental cars, which once again came back and caused a huge deficit for the carriers because they weren't expecting to pay those amount of days and that amount of money for both rental reimbursement and for you to get back into your vehicle so that you could return that vehicle. So the pandemic has played havoc on insurance rates and continue to play havoc on insurance rates. As we've seen, yes, a lot of us have seen and gone to the grocery stores and seen how everything has increased. Everything. Well, your auto insurance has been no different. It continually increases. So with that being said, what can we do to save a few dollars in today's times? Well, number one, your homeowner's policy. Your homeowner's policy has taken a big increase, and it's taken a big increase in what most people realize is that your coverage A is what's covering your actual structure of your home. That coverage has gone up significantly because building supplies have gone up so much. While building supplies go up, your rebuildment cost of your home has gone up. Please remember, one of the biggest misconceptions is my house isn't worth this much. That is not what we're insuring you on your homeowner's policy. We're insuring for a claim. If your home burns down, we have to cover the debris removal and the rebuildment of your home. It's not for what the cost is of your home to sell. The most important thing to understand on your coverage A is that enough coverage to rebuild your home? And that is a misconception that's often talked about. I've had clients call me and say, well, I'd love to sell you my home for $800,000. Well, Mr. Client, it's not about what you're selling your house for. The contract between you, my client, and the insurance company is that we make sure that you have coverage to rebuild your home, make you whole if something happens to your home. So that is key. So what are you going to do to save money on your homeowners? First and foremost, please don't look to cut coverage. Look to save money on your deductible. We're seeing deductible be increased more than ever before because there is savings. If you have a $500 deductible, You can't even purchase a policy at $500 deductible. It makes no sense to purchase. Look at a minimum on your homeowners, a minimum deductible of $2,500. Other ways to save money is there are now policies that offer hurricane deductible, which is on top of your regular deductible, which is different. In case of a hurricane, there's a 1% deductible. There is savings if you would like to take a little bit more risk. With that risk comes savings, but with that risk, if a hurricane comes, you would have that deductible. That's the place you want to save money. It is not saving money by cutting coverages. We have people trying to cut coverages. If you have 3,000 square foot home, we can't insure a 3,000 square foot home anymore for $450,000 or $500,000. The average, what we're seeing here in Connecticut, is roughly about $300 a square foot. So if you have 3,000 square feet, you times that by 300, that's a $900,000 coverage A policy. That's what it's costing to rebuild. We don't want to cut coverages there, because what happens in the case that you decide that I only want to insure it for $500,000 when it's a 3,000 square foot home and it should be insured for $900,000, your deductibles change because you're underinsured. You want to make sure you're insured to value. That is not a way to save money. That is a way to bury yourself if you have a complete fire loss to your home. So make sure coverage A is accurate. Make sure there's something called a costimator done that is to rebuild your house if something happens. That is not a place we want to cut coverage. What we want to do is, if we want to give you advice, we want to save money. Save money with hiring your deductible, taking more risk. Look at $2,500 as a base. If you can afford, go to $5,000, or in my case, I went to $10,000. Why? Because I don't want to put in small claims. Small claims will get us most likely either canceled or even increase our home rates even more. If I have a fire and there's a $300,000 loss, that is why I buy insurance. I don't buy insurance for a $5,000 loss. It's just not worth it. Premiums are rising in 2025 because everything else is rising. If you look at car rentals, that's risen. The number one thing people don't realize, what's having a major effect on home and auto insurance rates and premiums. Look at what happens to your costs when you're in the hospital. The medical bills have gone up substantially since the pandemic. During the pandemic, obviously things changed. After the pandemic, what we saw is medical costs at a complete rise. That rise of medical costs has cost insurance companies a lot of money. Premiums are going up because of the costs of not only medical bills, rental reimbursement, because now more than ever, it's more expensive to rent a rental vehicle. So the expenses have gone up, which is now being passed on to us, the consumer. It doesn't feel good. We see it at the grocery store. It's no different in the insurance space. We hope with some changes, maybe some legislative changes, maybe some other changes, that things will calm down. But the one thing I challenge you is, with these wildfires that are going on out in California, this does not make it any easier on our insurance premiums, because at the end of the day, insurance is shared risk. We're going to be sharing in this risk. There is billions of dollars of lost homes. Unfortunately, thoughts and prayers with the people that have lost their lives and their families. But let's remember, your insurance premiums are affected by what takes place on the other side of the country. We, the people, will come together because we share in that risk. You will see carriers from all around the country helping out and pay for these billions and billions of dollars of losses that are taking place out in California. And that will be a shared risk. That will be passed on. Unfortunately, I'm not here saying that it's doomed, but the insurance world is upside down, and this has not helped it in any which way. So insurance premiums in 2025 aren't looking to go down. Unfortunately, they're probably looking to continue to go up into 2026. The pandemic has raised havoc in the commercial insurance world, and you're probably going to say, how is that? Well, I'm going to give you a quick example. Insurance rates are based on insurance risks. During the pandemic, things changed. Have we ever thought about a liquor store or a package store delivering alcohol? Well, insurance companies knew and understood that, especially here in Connecticut. That was a no-no. That was illegal. But with the pandemic, they needed to loosen up. They needed to help small businesses survive. So they loosened up some of the regulations. That is just one case of risk that was now transferred. Carriers then realized that they have more risk. Somebody is delivering that alcohol for that package store, where they were insuring a risk as a package store. You're going in there, you're picking up your alcohol, and then you're leaving with that. Risks have changed due to the pandemic. The pandemic has changed businesses to evolve to survive during that time. Look at restaurants. How many they now became outdoors during the pandemic? I know it's changed since then, but there was a lot of risk to those outdoor venues that were never outdoor venues. For example, we had a case where a motorcycle went into a tent that was set up during the pandemic, which caused havoc. Many people were injured because during that time, lawmakers had loosened up some of the regulations in order to help small businesses survive. It was a good thing, but the downside was there should have been more concrete barriers. There should have been safer ways to be able to have these outdoor venues. So that's caused insurance companies to pay out millions of dollars in claims. They didn't understand the risk. The pandemic has changed commercial business insurance and continues to change commercial business insurance as it evolves and businesses evolve. The other big change that took place is during the pandemic, what happened? All of a sudden, now everybody's working from home. Think about your homeowners. Think about now your business that you work for. You work for a corporation. All of their equipment now is in your home. Who's insuring that? So the pandemic has changed the whole landscape of how insurance companies are actually looking at risks. It had to stay more focused. It had to widen its lens. And that's what the pandemic has done. It has changed the way insurance companies have to charge because of the risk and the changes in the risk, which are substantial today.